Welcome to Retiring Well. Have you ever wondered the difference between a tax preparer and a tax planner? What's a sunken cost trap? What's that all about? You know what the US dollar index is and why we follow it? You know what qualities you want to look for in an advisor? How about tax bracket optimization as it has to do with tax planning? Well, folks, we're going to talk about all these things today, so stay tuned.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Hi, welcome back. Now listen, in this segment, I want to talk about tax planning. All right, now there's a big difference between a tax planner and a tax preparer. The best way for me to illustrate this is think about tax season. When do you have most of your income tax documents? Wouldn't you agree that whether you open up the mail that says important tax information or not, that mostly everybody's got that by at least the middle of February, right? And then I can tell you that most people like to have their taxes done by April 15th. So if they're getting most of their documents by middle of February and they want it done by April 15th, how much time is that for most preparers to get all the tax returns done? Literally only 2 months. Now think about that. How much tax planning do you think they're doing in that 2-month period? Now, I had my own tax and accounting practice for over 25 years, and I can tell you during that 2-month period, I was just trying to get taxes out the door. I used to pride myself on giving people, advice, maybe looking at some observations, maybe showing some things they could do to save money. But the kind of tax planning I'm talking about, running mock returns and strategizing and that kind of thing, wasn't happening in that period. So a lot of people think they've got a tax planner, but really all they got is a tax preparer. Now, what's involved in income tax planning? Now, for most people that we work with, soon to be retired folks, the kind of tax planning we're talking about is really tax bracket optimization. If somebody's got Social Security income, maybe they got pension income, maybe they got part-time employment, maybe they still got wages, and now they have to take money out of the IRA, that's right on top of all that other income. What bracket do they find themselves in? And if there's any room in that bracket, that is a great opportunity to do what's called Roth conversions. That the idea that we're going to pay the tax on the IRA and convert it over to a Roth IRA. Now, let's say I'm in that, 22% tax bracket. I'm always going to be there based on all my other income, and I know when I take money out of my IRA, it's going to fall in that bracket. What I'm conceding is that Uncle Sam now has got a 22% interest in my IRA. I have a partner in that account. So knowing that if I've got any room in that bracket, why would I not go ahead and accelerate money out of the IRAs, convert it into a Roth, pay the tax on it at the 22% rate, and convert it, because I'm basically going to pay that no matter what. If tax rates ever go up in the future, well, guess what? I've saved, I've got it out of there early, growing in a Roth, tax deferred. Now, IRA exit strategies is another thing. How do I get that partner out? Well, Roth conversion's one way. How about life insurance? If I know Uncle Sam's going to get 22 cents on the dollar, what if I had a life insurance policy there to pay it off Uncle Sam, when the first spouse died? So tax planning, there's a lot involved in it. Encourage you, if you're somebody that does not have a tax plan and you want one, then give us a call. We'd be glad to sit down and see if you're not a Roth conversion candidate.
Every success story starts with a plan. The success of your retirement depends on a solid financial plan. If you are nearing retirement or already retired, we invite you to an informative live event to help you plan to retire well. There is no cost and no obligation, and dinner is on us. We are Centennial Wealth Advisory, financial professionals, specializing in retirement planning and serving all of Northern Michigan with offices in Traverse City, Cadillac, Petoskey, and Gaylord. Our presentation includes highlights of the Tax Cuts and Jobs Act of 2017 and the big opportunity it presents over the next 7 years. The surviving spouse tax trap, how can you avoid it? How two similar portfolios can end up with two drastically different results. What's the definition of a bull market? Do you know your risk exposure? And much more. Call 888-608-5825 to register Tuesday, March 17th at Big Buck Brewery in Gaylord. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow, but seating is limited and tends to fill quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event to help you plan to retire well. Call 888-608-5825 today.
I want to talk to you about what's called the sunken cost trap. Now, this is a mindset we can get ourselves caught up in when it has to do with purchases and the like. Let me give you an example so you can kind of better understand this. Think of that vehicle you might have owned in the past. You know, it might have been older, you didn't have the money to get a new vehicle, so you're buying this car, you're fixing it up, you're continually putting money into it, and you know in your mind how much money you got into that vehicle. Now, you get to the point, you've got so much money in that vehicle, you don't want to get rid of it because you know how much you have into it. Okay? This is what we call the sunken cost trap. Now, what's the problem with it? Well, how we should be looking at that vehicle is, yes, we've got all this money into it, but it is what it is as of today. We have to look at it, how is it going to best serve us from this day forward? If there is another vehicle I can get into that can serve me better, then why would I stay with the one that I've got all this money into? Because again, you have to look at it as it is today. So if there's another vehicle I can get into, it's probably not going to have as much in repairs, and it can better serve me going forward, then I probably better be able to make that switch, right? Folks, the reason I bring this up is this can happen with individual stocks as well, or maybe our mutual fund or the like. We know how much money we put into that instrument, all right? It might have taken a drop, maybe dipped down, or whatever the case might be, and now we hold on to it, and we think that that's going to, serve us better because of the money we put into it, when maybe the better way to look at it is there something else that can better serve me going forward, and making that switch. We do this with strategies as well. You could have an investment strategy that you've bought into, or a stock picking strategy that you bought into, and you're going to stay with it because you know how much effort you've got into it. But if there's something better that you can do going forward that would better serve you forward, then getting stuck in that kind of a mindset could be hurting you. Now, I've watched this happen with sharp, quick losses in the market. We had one not long ago in the fourth quarter of 2018. Market dropped very quickly in a very short period of time. I think it was like 16, 17% in just a 3-month period. And people were afraid to make a move because that was their strategy. They knew what they had into it, and they were afraid that if they changed up, they weren't going to get it back. But what they should have been looking at is, what am I in today? What can better serve me going forward? So hopefully you found this valuable. It just giving you kind of an idea how sometimes we, in our own thinking, we can get caught, believing one way when maybe we should be a little bit more open-minded. So hopefully you found value in that. Give us a call if maybe we can be of any help.
Great job there, Larry. And one of the things that really comes to mind is the tax planners versus preparers. And from my perspective, I don't think anybody knows that better than you, because if you don't know already, Larry had his own tax and accounting practice for 25 years here in Traverse City. And so it's something that he's very familiar with. And something that I've learned over the years is it's a completely different ball game when you're looking at the preparation and what goes into that over that short amount of time versus then the planning aspect, which is typically outside of that busy season of tax time. And normally for us with our clients, by the October, November time frame, we're wanting to get a good idea of sort of where they are for the year to better understand sort of what tax planning opportunities they might have for that calendar year. So it's something that we feel is vital within your retirement plan on a year-by-year basis.
Yeah, John, I mean, we find ourselves doing tax planning all year round, you know, whether somebody's taking income, what kind of account to take it from, what was their situation last year. Tax planning is vitally, vitally important, but I appreciate you feeling my pain a little bit for, you know, my years in the public accounting world. I mean, 2 months, folks, that is not very long to, you know, get all the returns done. And you have to know I was not doing that kind of planning, you know. Now, when we do kind of planning, what we're talking about is running a number of different scenarios, trying to see, you know, the best way to buy out Uncle Sam at the lowest possible price. So that kind of planning can't happen in just a quick observation. You have to run some scenarios. It takes some time. So hopefully that if you're somebody that wants that, you'll give us a call and we gladly sit down and see if you're a candidate for maybe a Roth conversion or something.
Yeah, one of the other areas, Larry, that you were talking about is that sunken cost trap. And since one of our business partners, Art, who's normally on the show with us, can't join us, but we're talking about that sunken cost of vehicles. And Art and I have been best buddies since we were 5 years old, and he still has his, if it's an 86 or 87 Chevy Blazer that he's had, that was his first vehicle, and he still has it to today. And so he's put some money into that over the years, and now he tells me it's just one of those situations where I've got so much into it, I've just got to keep it now for forevermore, ultimately.
Yeah.
So
we do that, and we do it with investments too. You know, you've got this stock that maybe dropped in value, but you know how much you've got in losses. You hate to give it up now, but the way you're supposed to look at it is you need to look at that stock today. Is there a better stock that can replace it? You know, we can't get that emotionally attached to that stock. So anyway, hopefully you found this valuable. Stay tuned, because in the next segment I'm going to talk about U.S. dollar index, why that's important, why we follow it, and qualifications to look for in an advisor. So stay tuned.
we look forward to helping you plan to retire well.
If you're retired or approaching retirement in the next 5 to 10 years, join us for an informative live event. This event is all about you, the challenges you face, and the information you need to help you build the future that you want. There's no pressure to become a client. Our goal is simply to give you valuable information that you can use to make smarter financial decisions. We hope that by the time you leave this event, you'll be one step closer to your retirement goals. I want to talk to you about the dollar index. Now, this is an index that was created in 1973. What they basically did is took our currency, compared it with the other world currencies, and they baselined it at 100. And then we've been basically tracking it ever since. Now, sometimes it can be up, sometimes it's down. I think at the end of 2019, it was somewhere around 96, 97. What was that saying? Basically saying that our currency relative to the other world currencies was just about the same as it was back in 1973. Now, why is this something that we follow? First of all, when we got a strong dollar, which should be a good thing, right? But when we have a strong dollar, it makes our exports more costly, which hurts our manufacturing. All right, now how's this work, you say? Well, if you've ever traveled abroad, maybe it's Mexico, maybe it's Canada, you'll notice that if our currency relative to that currency, that foreign country you're entering into, is stronger or better than their currency, then you get great purchasing power, because you get bigger bang for your buck per se, and it makes what you're buying less money. So that's a good thing when you got a strong dollar and you're spending it abroad. But what it does, a strong dollar, like I said, is makes our exports more costly. You'll find if the other currency from the foreign country that's importing goods, they have a competitive advantage because their goods coming into our country are now less expensive. All right, so this again hurts our manufacturing. Now, manufacturing makes up a good 10% of our GDP, so this is something that we want to follow very, very carefully. Now, the other thing that you want to pay attention to when we're looking at the dollar index and why we care about how strong the dollar is all commodities are traded in U.S. dollars. So you'll find that when the dollar is starting to weaken, commodity prices will rise. This is something we definitely want to pay attention to. Now, you'll hear a lot of news, about China and the trade war we find ourselves in and how they're manipulating their currency. That's because Chinese government is in a lot of the public-private enterprises in the country. So they also have the ability to manipulate their own currency. So it gives them a highly competitive advantage when they can play games with their own currency, bringing it down, making their imports into our country less expensive. It kind of gives them a competitive advantage that we don't like them to have. So hopefully this kind of gives you an idea why this is something that we want to follow, why we want to pay attention to it. Hopefully you found some value in it. Thank you.
NMC Extended Education is introducing an educational class titled Retirement Secrets, Your Best Is Yet to Come. Our very own Larry Flynn will be the presenter. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The three big things being healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for a predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on 2 Wednesday evenings at 6 p.m. for 3 hours, April 1st and 8th at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700. The class is called Retirement Secrets. Again, that number is 231-995-1700.
Qualities to look for in an advisor. What are they? Well, the first one you want to have in that advisor is experience. Folks, this is very important. When I first got involved in financial services, it was in the late 90s, and I'd never experienced a down market before. All of a sudden comes along 9/11, 9/11, it's 2000. I watched the market drop to almost half its value in a 2.5-year period. That was very important for me to have to experience because in all my training, they talk about market volatility, but I had no idea the markets could be that volatile. And so having the experience of having to have a walk through that was very, very important. 2008, the credit crash. Another time, it dropped to almost half its value. This time only in a 15-month period. Very important for me to have to live through that. Now, by that point, I was much more experienced because I'd already experienced a market downturn. So I, knew they could come along. I knew the risk people were taking, and I had them positioned appropriately. So having the right experience is very important. I remember as a young man, the only time I said experience didn't matter was when I didn't have any, right? So very important to have that. The next thing you want to look for in an advisor is, do they really have your best interests in mind? Now, this is a little harder to determine because, if they're trying to sell you something, they're obviously giving you all the positives of what they're trying to sell you. But how do you really know they have your best interests in mind? The best way I think you can tell is know the kind of questions they're asking you. Are they really, really concerned about what you need or want? And you can tell by the questions they ask. If you walk in and all they do is start talking about what they do and how they do it, and this is why we do it, but they never ask you anything about yourself and how you feel about things, what experience maybe you have, maybe some experience that you had where the market dropped to half its value, and you said, hey, I don't ever want to see that for me. So you can kind of tell by the way they kind of ask the questions and whether they're really listening. The other thing you want to maybe look for in an advisor is, are they independent or not? You know, are they just selling one company's products? If they're just selling one company's products, they're probably not going to be independent, meaning they're really trying to just push that one product. But if they're independent, maybe they can sell from a vast array of financial companies with a vast array of financial instruments. More likely, they're going to be more independent, aren't they? Because they're not just selling one company. The other thing you want to look for is communication. Are they regularly calling you, talking to you, or educating you on what's going on in the markets? Very important. Number one complaint we get with people coming in to our offices, they didn't call me, they don't talk to me. So very important that they communicate with you as well. Hopefully these are all good qualities you want to look for in an advisor. Give us a call if you're not getting that. We'll show you what we're doing, how we're doing it, most importantly what you want, so we can help.
Thanks, Larry, for talking about the U.S. dollar index, and it's actually something that came up in a conversation with Dawn here in our office, who helps with actually the marketing of this television show, as well as with Medicare planning, and so we were talking about this, and she brought up how she grew up down in the Thumb area of Michigan, and ultimately a trip across the border to Canada wasn't that big of a trip for them, but they were able to basically make their dollar go much further, so they were able to go and enjoy bowling and pizza and have fun with the family at a lower cost. But I know, Larry, you've experienced the opposite effect of that.
Yeah, I remember taking some vacations up into Canada, and we got up there and the dollar was weak at the time compared to Canada, and actually everything seemed more costly.
Yeah.
But then I've had times when I've been to Mexico on several occasions, and the dollar was really strong. We were there recently, and my wife and I had tremendous dinners. It was like 500 pesos. Here, folks, that's like $30. So we had great meals, a drink, and it was only like $30 because our dollar is strong.
Okay. The other area, Larry, that you were talking about is qualifications as an advisor, and it's sort of funny as the airing of this show actually is the celebration of 15 years that I've been here at Centennial Wealth Advisory, and just really enjoyed working alongside clients and working along everyone here at the office, and just seeing how Centennial Wealth has changed over those years. But one of the key things that we've found that's important is ultimately looking at every single area of your retirement and trying to come alongside you and make sure that we're being helpful and provide value for you when it comes to not just your investments, but also your income planning, tax, estate, healthcare planning, insurance planning, all those different areas that we think are so vital in helping you plan to retire well.
Yeah, John, I shared in that segment that the only time I said experience didn't matter is when I didn't have it, right? Because I didn't have it. So, it certainly wasn't what I wanted to portray. But I can tell you now, having a number of years of experience now, probably 20 in this field, I do believe experience matters, because when you're dealing with all these things such as estate planning and tax planning, if you've got experience with them, you can advise much better. So, folks, if you're somebody that doesn't have that kind of plan, whether it be an income plan, an investment strategy, a tax plan, estate plan, maybe a long-term care health care plan, then I encourage you, give us a call, because we've got the experiences in this matter. We work with retirees all the time, or people soon to be retired, and we can help. So I encourage you, give us a call. Now stay tuned, because in the next segment, last segment, I'm going to talk about tax bracket optimization. I talked a little bit about it in the first segment with tax planning, but now I want to get a little bit more specific with it. So stay tuned.
Are you retired or approaching retirement in the next 5 to 10 years? Join the Centennial Wealth Advisory team for an exciting presentation with complimentary gourmet dinner and learn essential financial strategies for a comfortable retirement. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Call 888-608-5825.
Tax bracket optimization. What is it? Listen, all it is optimizing tax brackets. All right. There's several brackets of taxable income that you need to understand and know where you're at in. For example, we used to have what we called the 15% tax bracket, okay? Now, under the new Tax Reform Act, that's actually 12%, 3 percentage points less. The next tax bracket used to be what we called the 25% bracket, but now that is only 22% under the new Tax Reform Act. Okay, now the lower bracket, now 12%, that's going to be all your gross income up to about $100,000, you know, give or take. I'm just going to round off for sake of illustration. The next bracket, it's gross income of about $190,000. Now, a lot of people don't understand this, but they think that if they fall in this higher bracket, that all their income gets taxed at that rate, and that is not the case. The first $100,000 that you make is going to get taxed at this rate, 12%, and then the next, any money above that only gets taxed at the 22%, not all of the income. So let's say I'm that person that has pension income, okay, and maybe I have Social Security, and so now between my pension and Social Security, my taxable income is, let's say that's about $70,000 total. I've got $30,000 here available to basically do what? Well, either accelerate and take income because I'm in the lower bracket, right? Or maybe I have an opportunity to do what's called a Roth conversion. Maybe I can take $30,000 each year while I'm in that lower bracket and buy Uncle Sam out at the low rate. Why would I not do that? Now, a lot of people don't recognize with the Tax Reform Act that in about 7 years, this is all going to revert back to the old rates. So I have a huge opportunity right now. If I'm somebody that's always going to be in that 15% bracket or in the 25% bracket, I've got an opportunity to buy Uncle Sam out at 3 cents on the dollar less now over the next 7 years. So here's an opportunity, but this goes just as well. Let's say I'm that person that has pension and Social Security income, maybe other income that's putting me right here. And that's always going to be the case. And then I have my IRA money. Well, if I know I'm always going to be in this bracket, now I have another opportunity right here to buy out Uncle Sam at that rate. So understanding where you're at in the tax brackets and the opportunities thereof, very important in tax planning. So I encourage you, if you're somebody that doesn't understand this, want to see if maybe you're a Roth conversion candidate or the like, then give us a call.
Really great information there, Larry, talking about the tax bracket optimization and how important that really is for your retirement planning. And it makes me think of how we talked about earlier in the show, tax preparers versus planners. And I think today, in today's world, the accountants are primarily looking at your tax return this year and how much taxes they can save, but they're not necessarily looking at down the road once you're retired. So if you're soon to be retired or already retired, really this tax bracket optimization that Larry just walked you through is going to be vital when it comes to your retirement planning.
Yeah, John, I think of that story, that individual that had talked to their advisor, I think it was like 10 years ago, and they said, hey, which account should I pull from? They were in the low tax bracket, and the advisor told them to pull it out of the Roth IRA because they wouldn't have to pay any tax. Folks, for 10 years, they had all this room in that low bracket that they could have been accelerating money out of the IRAs or possibly even doing Roth conversions, which have been a huge advantage for them. So if you're somebody that, you know, wants to have a tax plan to see kind of where you're at with that, whether Roth conversion is appropriate for you, folks, even if it was just a little bit over time. I've got some people that, you know, they're just doing maybe $5,000-$10,000 a year. At least that's something. You know, they're buying out Uncle Sam at the lowest rate. You couldn't ask for anything better than that. So if you could use any help in that kind of planning, then I encourage you, give us a call. We'd be glad to help.